Hello again, John Flynn here from Flynn Real Estate, here once again to give you my professional and honest opinion for the 2023 Canadian housing market. This week, I'm going to talk about new home prices and where it may go this year, some statistics before that, and just one thing to start off this video from the Financial Times. Recession will hit a third of the world this year, IMF chief warns. So, of course, this article, the link's in the description, but they're talking about the recession hitting not just, like, say, North America. It's going to hit Europe, US, China, and a bunch of the big countries. Do I believe this mainstream media? No, I think it's going to be worse. But anyway, we'll see where it goes. Next, on to some statistics from Ontario. It's so my usual area, about 20 boards surrounding GTA. And this is for December, just some preliminary stats for December because the rest of them are not out yet. But let's take a look at them. So first of all, here's the number of sales in these 20 boards. Now, if you look, we're at the lowest point since 2009. I keep saying in many videos, like, the sales can't get much lower. I've been wrong. They keep going lower and lower. Looking at this chart here, we had lower sales in December than we did in the pandemic, April 2020, when the pandemic first started, I should say. And of course, you have to go all the way back until January or so of 2009 to get sales this low. So this is pretty disturbing, knowing that our population since that time has increased by millions of people, right? We should actually have more sales for our low point in the sales, but the lowest since 2009. So that's a pretty significant number. And now looking at our new listings are very low also. Obviously, every winter, you can see they're always at this low point. So nothing abnormal. It's just a winter low for new listings. Months of supply is also still low. It's at 2.2 months right now. Very low for this area. But again, we have low sales, so it's kind of a very interesting dynamic going on with those. Another low point is the average percent of last original list price. And again, on this one, I think we're at 94.6, I believe it was. You have to go back until 2012 to get the same levels or low levels that we have now. And lastly, this week is our average price. It's now at $730,000. It dropped another 1.6% month over month from November to December. That's $12,000. So you're looking at $3,000 a week home prices, or the average home price is declining at this point. It's pretty significant. Again, 1.6% a month doesn't seem dramatic, but if you had 1.6% every month, you can add that up and you're going to have some pretty good or hefty yearly declines. And it's 25.8, almost 26% from the peak. Our prices have dropped in this area, or 253,000. Yeah, so this week I want to talk about new home prices because I got a lot of feedback and a lot of comments saying, it costs so much to build a home. It's kind of like a precedent or a benchmark price where they're not going to get any cheaper and they can't get cheaper. So ultimately, resale homes can only go down so much. So my argument is, new home prices can get cheaper and have got cheaper in the past. And I want to show you some kind of statistics to support that theory. But first of all, I want to look at some recent listings and compare some new home prices, asking prices, to some resale home prices, just to show you the disparity between the two. Now, all this information that I'm going to show you is public information. None of it is from my internal realtor website because I'm not allowed to disclose certain information. So everything I've got here, and there are some sale prices, they are readily available for the public to get. And of course, this is where I've got them and the information I'll be sharing. So I'm not going to obviously get dinged or in trouble from my real estate board for providing sensitive and private information outside of what I'm allowed to. So the first home I want to look at is from a new neighborhood. It's actually Mountain View, I believe, is the builder on this one. This is in the Splendor neighborhood in Niagara Falls. And we have a just over 2,000 square foot new home starting at $1,065,000. It's a 3-bedroom, 2.5 bath, and it's on a 40-foot loft, 2-story. Nothing special. This is not a high-end home. This is just a regular home. Now I want to compare it to something similar that's on the market. This home is just a few years old. It's listed at $799,900. It's just a couple of kilometers from the first house, the new build I showed you, in a very comparable neighborhood, very comparable finishes, 4 bedrooms, 4 bathrooms, just over 2,000 square feet. So we're going from $1,065,000 to a 2-3-year-old home or 4-year-old home. It's only a few years old for $800,000. Plus, you can maybe be able to negotiate off this price too. I don't know if the sellers are firm on this, but it just came on the market 11 days ago. So I guess my point is, why would somebody buy a brand new home in a very similar neighborhood when down the street you can get a resale home that's a few years old for $300,000 less. Let's look at some more. Here's a 1,600 square foot townhouse, 2-story townhouse on a 20-foot lot, 3 bedrooms, and it is from the same builder, starting at $843,000. And now looking at a resale home, this one is actually brand new also, and it's $729,000. Now, this home hasn't sold, so of course we can't say that this was the sale price, but again, substantially cheaper than the brand new one. Now, this has a 2-car garage. I believe the other one only had a 1-car garage. Same square footage. Actually, this one's a little bit bigger, and it's a 3-bedroom, 3-bathroom home. So on the resale market, there's substantial savings for buying a few-month-old home or a few-year-old home in very similar neighborhoods right next door. Actually, this neighborhood is right next door to the other townhouse I just showed, the brand new one. If you want to go 6 or 7 years old, here's another one, same square footage, literally right beside the neighborhood, the new neighborhood that's $842,000, just sold for $653,000. Yes, you might need to put some paint on the walls, but again, it is a 6-year-old or 7-year-old house and same square footage right next door. Moving on to another neighborhood in the Niagara region. This is the last neighborhood, brand new house, just over 2,000 square feet, 4 bedrooms, 2 baths, or 2.5 baths, starting at $990 plus. On this builder, you're going to need at least $50,000 in upgrades, but whatever, you're $1 million plus for a brand new 2,000 square foot house. And in the same neighborhood, you get a just over 2,000 square foot house plus a finished basement. It has 3 bedrooms, but it has the one in the basement, 4 bathrooms, 2-car garage. It's probably 3-4 years old, this house at most. $825,000, so it's $200,000 savings by the time you upgrade the new one. Same neighborhood, so it's pretty tough sells for these new builders right now, knowing they're competing with resale homes that are only a year or two old, and they're selling for $200,000-$300,000 less. So when we're looking at building a house, of course, building prices have skyrocketed, right? No one's going to argue that point. But will they come down? I say yes, they'll come down. There's land prices, there's commodity prices that, obviously construction materials to build homes, wood, copper, etc. So I want to look at kind of where these prices have gone and where I think they're going to go. First, I'd like to start with the Niagara region and land prices. So here is a 10-year chart for land prices. And you can see from 2021 to 2022, they've gone up 34%. And this is the median price. I'm going to look at average and median. So they went from around 85,000 in 2015 to 2016 to like 325,000 or so. 34% or 4 times, a 4x increase in sale price. So all of this land is less than half an acre. I wanted to keep things less than half an acre, like a regular lot you would build a house on. This is the same data in the Niagara region, but it's looking at the average sale price this time. The average sale price in 1 year went up 39% from 2021 to 2022. Again, that's a 4 times increase from the 2015-2016 period. So land has skyrocketed. I think we're in for a good reset on land, but let's compare that to house prices from the same area. So in the Niagara region, residential house prices or residential unit prices went up 10.5% from the average of 2021 to 2022, and a 2.5 times increase from 2015 to 2016. So you can see that there's been a big premium on vacant land, which is changing now because builders will not be able to make the money they have been. Many of them won't be able to make a profit from these smaller land purchases that they've done, or the smaller builders, I should say. And of course, the big builders, their land is usually not included in this because they get them directly from developers. Developers don't sell land usually around here to smaller private individuals. They're all reserved for the builders. So of course, let's talk about construction costs now. Lumber went from around $400 pre-pandemic for 1,000 board feet of lumber to over $1,600 US, 4 times it went up. Now that has come back to pre-pandemic levels. And looking at this chart here, you'll see it's right now it's at 382, which is kind of the norm for the last 5 to 10 years or so. And you can compare it to 2017 prices, 2019 prices, to 2020 prices. When we expand the chart further, we can see we stretch all the way back to 2013. So again, lumber has spiked and it has come down. The demand has subsided and it's back to reasonable levels now. So there's no premium on lumber at this point. Copper was another big ticket item used in wiring. It used to be used in plumbing. They use plastic now. But anyway, coppers obviously affects the price of homes. And copper is kind of at a midpoint right now. It's not super high, it's not super low, but it has come down from the peak. And you can see on the long-term chart, we're probably a little bit above average, but it's nothing excessive. One thing I want to point out, you'll see after 2008, the price of copper dropped significantly. Of course, we're in a recession, supply demand, there's no demand, it drops just like it did in 2016. It dropped again, there was less demand. Again, these are commodities, supply, demand, recessions affect them. Next, I want to look at gypsum. It's in drywall and sheetrock and whatnot, big part of building homes. And you'll see this is at an all-time high right now. It's going to drop just like it did in 2006, 2007 there. It dropped. It's actually dropped before the financial crisis, but it dropped in 2000 after the dot-com bubble. So it is a commodity. It goes up and down. Recession comes, it drops. So right now we're at a high, but I see gypsum dropping, their price significantly dropping back to a more reasonable pre-pandemic level. So ultimately making houses more affordable to build and buy. Another thing that is also at its peak right now is cement or concrete. Actually, my sister, she built a couple of houses or a few houses. You know, she told me she paid $40,000 for her foundation about 3 years ago. And on a similar size house now, she's spending $100,000 on the foundation. So cement, not just for homes, but all the pools people installed, there is a big global demand right now for cement, which again will subside once we're in this third of the world's in the global recession and whatnot. It will come down, reducing the cost of building homes. You can see here after 2008, it did subside a bit, but we're going to come back to more reasonable levels, I believe, pre-pandemic, probably 2020 levels, maybe 2019 levels. So we have all these things, the commodities or the materials used to build homes, the land. Some of them you've seen have started to subside or have subsided from the last 2 years. We're going to see the rest, just like land. Land's not going to increase during a recession. It will significantly come down in price, just like home prices will, and which will make the overall cost of building a house less. Builders have based their builds off of these inflated prices. Of course, they have to get worked into the equation. That takes time. So I think within 12 months from now, you'll see most of these prices back to normal levels, and the price of construction will be back to a more normal level instead of an inflated level. And the last chart I want to look at is the Canada's New Home Price Index. I've shown this before in a previous video. You can see in 1990, it dropped 9.9%, almost 10% in 1 year, or 11.1% in the 6 years following the peak. In 2008, a year when Canada got off very easy in the global recession or in the Great Recession or whatever it was called, we dropped only 3.5% on this index. Now, this is an index. This is not average prices. Of course, indexes are lagging indicators and not average prices. So just because the index dropped 10% doesn't mean the prices dropped 10%. It's usually more. Prices probably dropped closer to double that, 20%. For approximately 3 months now, our new home price index has been declining, and we're going to see it decline throughout 2023. At what rate, who knows? But knowing that lumber has already come down, vacant land will start to come down, and these other commodities, when recession hits, they drop. This home price will drop even further, and it'll be interesting to see at what level will it settle out. I'm guessing you're going to be 2019 to 2020, just like my minimum predictions on the housing market. Could be further, but I think we're going to at least see those levels to return to those years. So yeah, that's what I want to say about new home prices. When people say, you know, it costs so much to build a new home, well, it's not true. Construction costs do fluctuate. They fluctuated to the high side now. You're going to see them decline. As always, let me know what you think in the comments. And until next week, I'll see you then.